Hi, Mickey Fulp, Mercenary Geologist. Do another CEO interview with my buddy Amir Adnani.
Hey,
Amir,
Mickey.
good to see you.
Yeah, Happy New Year.
Look at this, a sunny day in Vancouver.
It's amazing.
Yeah,
we're lucky.
Looks like we're on the beach. It's pretty rare for January. Today we're going to talk about not only your companies, but about the yellow metals.
The yellow metals.
Folks, there's two yellow metals.
I came prepared with my tie.
No, well, yeah.
Should have worn your yellow tie.
Well, I hadn't thought about that. I wore a red power tie for a power conference.
There you
go. But, yellow metals, main yellow metal is gold. The other yellow metal, which we talked about before, is uranium.
Uranium, yeah.
So let's talk a little bit about what's going on in uranium space. Price is up from $20.50 spot price in April. Yep. It's right around that $29 range, kind of taking a pause. Been there for almost a couple of months now.
Yep.
So give us some insight what's going on in the macro of the uranium business.
Just on the supply-demand, supply side has continued to come off with production cuts that we've had from Canada to Kazakhstan to Africa. And so when you look at the supply side of uranium from production, it peaked in about 2016 at about 162 million pounds.
Okay.
Last year and this year is expected to be about 135 million pounds. So it's a meaningful drop of about 30 to 35 million pounds from production. That definitely has had a positive impact, taking the uranium price, as you pointed out, up 35% from 21 a year ago to about 29-ish now. And exactly to your point, taking a bit of a pause, and arguably it seems to be a pause that could be driven by the political situation in the U.S. with the U.S. government's probe into national security concerns around foreign uranium imports. Whether it's that or other factors, I do believe we'll see a resumed upward sort of move in the uranium price this year, because we continue to have a situation where most uranium mines in the world can't make money at today's spot price. And long-term contracts that were signed a decade ago or 7 or 8 years ago have all either rolled off or are rolling off this year. So companies that were getting a bit of a cushion with the contracting, that cushion is disappearing now. So I think we're at definitely a very sort of important turning point of a year in 2019 for the uranium price. And you got geopolitics, you got supply-demand shifting from an oversupply market to a market that's got a supply deficit building now. And contracting cycles. You know, the last time utilities did major contracting was pre-Fukushima. We were talking 2010, almost a decade. These contracting cycles definitely are great drivers for uranium price recovery.
So where does UEC, Uranium Energy Corp, I forgot to tell you folks, Amir is the CEO of Uranium Energy Corp and the chairman of the board of Gold Mining Inc. So tell us where that puts Uranium Energy Corp with your ISR plans and your hub and spoke. And I know you've had news recently in Wyoming with your acquisition, ISR acquisition.
I think a couple of things. I mean, first of all, in the context of the global cost curve for uranium mining, ISR, or in-situ recovery projects, are first quartile costs globally and are cost competitive globally. Having said that, there is a special situation developing in the U.S. this year with this U.S. government probe into foreign uranium imports. We will know one way or other by this summer, which isn't that far away. If by this spring, summer, there is any kind of outcome of this government probe, Section 232, that bodes well for U.S. uranium mining, then that's a heck of an opportunity for UEC, because UEC as a company has now spent the last 14 years acquiring, licensing, developing, mining U.S. uranium, really covering all the bases. We've spent the last 5-6 years post-Fukushima to really drive an acquisition strategy. We've consolidated projects like Reno Creek in Wyoming that now ranks as the largest fully permitted pre-construction ISR project in the country. And so if the opportunity becomes one of needing to increase U.S. uranium production, then we're ready. And it wasn't an overnight thing. You know, again, it took 14 years to get there. Right. But in the context of a global recovery in uranium prices, I think to be focused on ISR projects, to have ISR projects that can come back online at $45 uranium, as opposed to $70 or $75, which is the incentive price for a lot of conventional mines out there, we're in a very good position. And we want to get a PFS completed this year, a pre-feasibility study at our Reno Creek project. That's building on the new 43-101 resource report that recently came out. We want to do an aggressive development program at Burke Hollow to drill out the monitor well. And this is all development work towards getting ready for the initial production area at Burke Hollow. And we're waiting just for one more permit, which should be issued in the first half of 2019 for Burke Hollow. And so there you have yet another project in our arsenal. Our Palangana project is ready. That's where we were producing already. That's on standby. Burke Hollow is being advanced aggressively. Complete a PFS at Reno Creek. You start to add it all up, and these projects are giving the company the building blocks to get up to potentially 4 million pounds per year ISR production from U.S. soil. So I'm really excited about the setup, and it's a setup, again, that's taken a long time of patiently putting pieces together. Our sector has been in a very difficult and long bear market. It hasn't been easy, but
8 years.
It's 8 years post-Fukushima, 5 years since we shut production in at Palangana to really be weathering the storm and this long winter that we've had in the uranium market. But every fundamental indicator and sign suggests that we've turned a corner. My favorite one is a stat that is courtesy of the World Nuclear Association, that this year's worldwide nuclear energy generation has finally recovered to pre-Fukushima levels. And of course, you know, when you put that into context of how, you know, we've had
going down.
You got it. So it really, the right signals, I think, are in place.
Well, we know it's coming. We never have been able to say when it's going to come, but it sounds like UEC is positioned and will be ready when what ultimately we know is going to happen happens, and that's higher uranium prices, not only worldwide, but especially in the U.S. with this Section 232
it's an extra kicker.
Yep, an extra kick.